Welcome back to another episode of Fact or Flop Friday. I am Jackie P, your CFP, here to break down internet advice and help you separate the good from the bad. Let's get started.
If you have an expectation that you're going to get more than 3 to 5% a year from the S&P 500, I would like to take the other side of the bet on that with you. So I think the odds that the S&P delivers over 5% returns a year for the next 10 or 15 years approximates zero. Look at the value of the businesses. If NVIDIA is valued at 3 or 3.5 trillion, sorry, not billion, trillion, the cash flows need to be in the range of 2 or 3 or 400 billion in a relatively short period, because as I go further out in the years, then I have to discount it.
Yep.
So when is NVIDIA going to deliver a year, single year, 500 billion cash flow? Between us girls, it's not going to be 5%. It's going to be less than 3%.
So today's hot take is a value fund investor named Monish Pabrai, basically saying he will take any bet that the S&P 500 will have a return of less than 5% per year over the next 10 to 15 years. Now, if you've been following me in any capacity in the past, you know that I have a very strong philosophy that no one knows what the market is going to do over the next 10 or 15 years. However, in this particular instance, he really gets into some discounted cash flows and a lot of math and talking about NVIDIA specifically. I'm not going to dive into the cash flow math here because that's not really the issue. Let's first state the obvious. His fund, year to date, at the time I'm recording this, is down 26%. So he is outperforming the market on the downside. So that doesn't really inspire confidence when making long-term predictions. He's also isolating individual stocks like NVIDIA, and I'm not going to argue with him whether NVIDIA is overvalued or not, but the whole purpose of investing in the index is that the index represents the strongest companies of the economy. So he might be right. NVIDIA might be overvalued, and it might not be the great stock it is today 10 or 15 years from now. But that's not the point. If it does fall off the map, it's not going to be in the index or have the weight in the index that it has today. The great thing about the S&P 500 index is that it's ever evolving and capturing the best performing companies. That's why folks like Warren Buffett always just say, invest in the index. History has showed that the S&P 500 has delivered strong returns over time, averaging 8 to 10% per year. And the S&P 500 index is not the only index someone should be invested in. We have a philosophy that you should also be invested in international, because international has performed well in times when the S&P 500 hasn't. Unfortunately, again, it's a flop. Making big, bold claims like this, especially when you're down almost double what the index is just not a good look. I'm Jackie P, your CFP, helping you block out the noise. I'll see you next week.